Everyone, welcome back.
Hey everyone, Kedge and Dim here. Namaste, Rich. I believe episode number 10.
Boom.
What started just for a bit of fun, just a way for us to catch up. And I think we're like 10 episodes deep, and I think getting bits of good feedback here and there. So we're getting a lot out of it, and hopefully, slowly, more and more other people out there are as well. Yeah, man, I think this all just, I don't know, just to kind of reiterate, this is where it all kind of started was like me and Dim we first of all, we weren't catching up enough. So it was a nice way for me and Dim to catch up once a week. But beyond that, like I think it was when we did catch up, I don't know, we're just having these just this awesome conversations, and we're just like, man, it would just be so good if just there was just if people were just flies on the wall just listening to this. So I think that's just kind of how this all started, and we just keep going, and so far feels good. And I think over time the audience, there's a few of you out there listening. I think it's going to keep growing. So I think it's going to turn into something quite magical. Yeah,
Amen, man. And that's exactly how it sincerely has felt. Like so many lovely conversations, and I'm sure even people listening at home feel this way sometimes about chats with certain friends that they have. And man, every time Kedge and I speak, I think especially because in Kedge and I's case, we um we're really in a phase of our life where we're really trying to do a lot, I would say. And so then as a result, every time we catch up, there's like so much shit to to catch up on. And also because we've tried to do a lot in terms of the personal development and psychology, there's so many angles with which we can try and understand everything, and ideally grow from it. And the fact that we get to share these lessons, and we've got the feedback from so many beautiful people at this point. So the fact that we get to share it is incredibly fulfilling. I would just say for myself, please do keep the feedback coming, like whether it's comments, whether it's shares, whether it's you just reaching out to us directly and telling us that you're getting value out of it. I would definitely say it does also help us stay encouraged that it is helping people, and without that feedback, we don't know, so yeah, just a big thanks from us as well.
Nah, awesome, Dim. Excited for today's one because so normally there's like zero preparation into these calls. We literally just turn the camera on and just start talking, and depending on what's happened with our week, we just let the conversation kind of go where it's going to go. Today, I did about 10 minutes worth of preparation. So, because I think I just spoke to Dim, and I think it was due at a certain point, but I was actually going to come out and just share some of what I've done in my own personal property portfolio. Like that's what I do, like obviously for our business. And I thought it'd be nice. A lot of people don't actually do this and don't actually share what they've actually done themselves. So I thought I would go out there and do it. I'm not gonna. I've got a slightly larger portfolio, but I'm just gonna share the last 4 or 5 purchases that I've done. Because I think my skills have got refined over time, and yeah, there's been mistakes in the past, and I'm happy to talk about that too. But for the sake of the hour that we've got today, just want to kind of share maybe the last few that I've done and why I've done them, and yeah, what they are.
I
So I
would love,
think
and
yeah,
I personally would love that myself, man. Because like Kedge messaged me before this call and was like, "Hey, Dim, I'm thinking about doing this today. What do you think?" And I was like, "Dude, I want to learn this stuff."
yeah,
And for me, when I started in the journey, it was incredibly rare to get access to really hearing candidly how people have been making these moves. So please, Kedge, take it away. I'd love to. Yeah,
yeah. And the
I'm
reason I
keen for
wanted
this.
to I kind of I think I'm going to fall, and then I'll share the fifth one as well. But almost each of them is like slightly almost different strategy. And I think what you kind of hear out there in the industry is like this is the only type of property to buy, or this is what you can do, and everyone's very dogmatic in terms of how you do it. I've got a bit of a variety of things in my portfolio, so keen to just like share why and how we kind of got there. But Dim, I want to make it as interactive as possible. So just like ask questions. If things don't make sense or things that you may think the audience will get value if I explained a bit more or whatever, like just jump in and ask. So yeah, so what I was going to do is I was actually going to go and actually share like the actual properties, the addresses, and do all that. But two things: one, maybe not the smartest thing from a security thing from my point of view, and I think Dim said on YouTube it might get taken down. So I've literally in 10 minutes like taken some screenshots and done some stuff. So it may not be the prettiest, but just the value will be there, I promise. So
Yeah, let's do it. Are you going to share your screen, Catch?
I will share, yeah, share my
Cool.
screen. So I've got a second
And
screen, so I'm going to be looking out this way when I'm doing it. So
no issues. And can I quickly jump in and say, for everyone listening, especially if you're newer to the property game, and even if you're not, I would say this is a really important thing that Ked's just said that a lot of people probably didn't even pick up on. Man, I remember, let me use a metaphor. When I went to the gym for the first time when I was 17 years old, I went around the gym and I asked all the guys, man, how do you get big? How do you get muscle? And I remember getting 10 different, very confident answers, which often conflicted as to the best way to gain muscle. And I remember like that first, I feel like more than a year for me personally at the gym, I was like this lost little puppy, where I remember like asking all these people and everyone just seemed to be so confident about what was like conflicting advice. And honestly, I think the big upgrade for me was like I actually paid for a personal trainer one day, and then it was only for a week. I think that's all I could afford at the time. But that actually he taught me so, or 2 weeks, and I think that really taught me the foundations underpinning everything. And it gave me like the kind of operating system where you can think about all of these different strategies to gain muscle. And I personally found that exact same thing happen with property, where I was like, I asked 10 different people, how do you get rich with property? And I got 10 different really confident answers. And especially now that I'm in business, I can tell you that one of the things that people do in sales and marketing is they strategically make you feel shit about everything that you've been doing so that it so they can entice you to buy into their strategy and to their way of doing it. And what I really love about what Ked's just pre-framed there is actually like the things he's showing you. There's a bunch of actual different strategies that you can do, and I really hope that we can extrapolate maybe the underlying principles which unite them and the different nuances. So I won't talk too much. Kedge, please take it away.
yeah, for sure. And I think this all is going to tie back into everything we've spoken about. Everything has its drawbacks, pros and cons. There's good stuff. Then there's reasons why you do certain things. But yeah, please ask questions because sometimes, because I do this day in, day out, I've got the habit of just going a bit quick and fast because it's second nature to me now, but can appreciate that it may not be to everybody else. So I'm going to share my screen. I'll go in order of purchase, actually. So let me try to do this the best way without giving away. All
Yeah,
right.
while he's doing that, everyone, like, yeah, Kedge was genuinely actually wanting to just show the whole, like, just all the details of the property, including the address. But what we found is YouTube can take the video down if they believe that they have personal details being shown. So I've had that in the past. That's why we're trying to do it as authentically as we can. Kedge, see if
Sure.
you can share your screen if this
Yeah, I'm
works.
just
Should work.
trying to, just getting something privacy. Okay, 1 second. We'll be there. Let's go to, may not be. Oh, saying my Zoom may need to quit and reopen. Let me press later. Let's see. Let's see how we go. Let's try again. So share. No, I think we're good. All right.
Yep,
So
it's coming up. Thank you,
yeah,
bro.
it's coming up. Perfect. All right. Can you see my screen?
Yep, got it.
You can? All right. Perfect. Perfect. All right. So this will be familiar to you. So I think we spoke to you about this suburb as well. You didn't end up making the purchase at the time. So
Yeah, I
you
regret
may hit
that.
yeah,
Not yet.
you might regret it after this after this after
I
this
I've
one.
uh, I've I've already regretted it, but yeah, let's do it. It's gonna be painful. Let's
All
hear
right. So that's all right.
it.
So I'll go in order. So there's four purchases, and so there's actually one more that I'm going to talk about. That was actually anyway. That's the four. Let's go in reverse order from the last four that I've purchased. So I'm going to say about this one. So this first one here is you might see an address here, but it's okay. But this one, this is what the house looks like. It's on a small block. It's only 352 square meters. So I'm giving you things that people will tell you not to do. So, right? It's only 352 square meters, relatively new home, very neat on the inside. Yeah, in the suburb of Madora Bay in Perth, right? So I'll give you like the high level information. Bought this for $697,000 mid 2024. Valuation now is about $1 million. So in less than 2 years, we've gone, you know, about 300K in growth on a $700,000 property. What's that? 40 something
Dude, that
percent
is
growth.
unbelievable. That's just incredible. Oh my. Wow.
Okay. All right. So yeah, so good outcome, right? So what I'll share here, a couple of reasons why at the time people may have been talked out of buying this at the time, right? So I'll start with a couple of points. One would be land is small, right? 350 square meters. Typically say buy as big a land as possible. Land is what grows, blah, blah, blah. It's a newer property. So some people sit in the camp of buying brand new. Some people stick in the camp of buy really old houses in, big blocks of land. So this one, yeah, a pretty new home on a relatively small block of land. And to add to that, just showing you a graph here of Madora Bay and the growth cycle, what you firstly will notice is like it almost did nothing for 10 years plus. Like you can see this graph here, and this is the average, the price in that suburb. And then you can see here at about late 2020, the prices have started to move. So I bought this in, where are we going? Let's go here, mid 24. So about here in the cycle. So the other thing a lot of people would have got scared of at this time is this market has run hot for this long of a time. They're like, oh, you're too late. You should have bought 3 years ago. You should have bought 2 years ago. It's too late. So but for me, based on the data points, there was still a lot of steam in the market, supply demand shortage, etc. So I'm going to let you ask questions to me now, Dim, but I'm just spitting out stuff. So I bought there. That was the outcome that I've got. Those are the reasons why I probably a lot of reasons why I shouldn't have bought in there. Land was small. Market's already run for 4 or 5, for whatever, 3, 4 years at that time. But I did it anyway.
Insane, man. I do actually. I wish was furiously taking notes while you were speaking. I do have a bunch of questions, and I am trying to think of people listening as well. But honestly, like even I have these questions myself. So,
Yeah.
were you going to say anything else before
No, I just wanted to
continue?
keep high level, and I think guided by your questions will be the best way to do this. So, like, I would
Okay,
love to hear. Yeah,
cool. So basically, I think you said it was 697,000 that you bought. So basically 700 grand in 2024.
yeah,
And now it's 2026. And you said it's a million. And I think what you mean is CBA or whatever. If you type in the address into CBA's evaluation tool, it'll give you the price of a million as the valuation.
and once again, don't need to go down a rabbit hole, but yeah, you get bank valuations, but they can be distorted by just doing that's what the online valuations are showing. Checking comparables in the market. If it was to go on the market today, genuinely would sell for, I reckon, one plus. Yeah.
Well, that's pretty big. Like because as I know that sometimes what it says on the valuation tool isn't what you can actually sell it for in the market,
Yeah,
right?
some
So
banks are notorious for overvaluing, some banks are
yeah,
notorious for undervaluing. So you do your so you take all of that information, but the real proper way to do it is like check the sold properties in the area in that pocket, run the proper like a self CMA is going to be the most accurate.
yeah.
Sorry, CMA stands for comparative market analysis. Um, but yeah, sorry, didn't mean to digress. So
No, no,
yeah,
it's great.
yeah,
And so for people listening, by the way, that's like so if he was to sell it, he's made $300,000 in profit, or he has to pay tax on that profit. But still, man, Jesus fucking Christ, like 300 grand in 2 years is pretty dope. Like at the end of the day, is pretty amazing. Number two, he doesn't have to sell it. He can just like do a reevaluation on it, get the equity out, and use that equity, which is usually going to be 300K, $300,000 times 80% to avoid the lender's mortgage insurance, to my understanding. And then, so whatever that is, I believe that's 240,000 if I'm not mistaken, because I've done this transaction in another property. So I believe I got the number right. So he gets 240 grand now, which he can use to buy another property. So that's my for people who are kind of new, that's kind of what we're looking at here. Kedge, can I ask, man, what was the entry price? Like how much did it cost for you to get into the property in the first place? And also what was the rent like? So was it quite negatively geared? Was it difficult to deal with? And then I think the third question that people would probably really love the answer to is, in the current thing with the budget and all that shit about negative gearing and all this shit that's happening, um, can you still do this? I have more questions than that, but how about we start with those three?
yeah, nice. I might take the budget question and answer it separately because that's going to be an overarching thing, or we can get into that as well. But
Nice.
yeah, the only quick thing is, it's not as dramatic as it sounds, but I'll come back to that. Yeah, come back
Oh
to
man, I
come back
think
to it
people are gonna be hanging, like waiting. I'm hanging for
later.
this.
So yeah, it's not as dramatic as it sounds, but there are some effects. But yeah, so this one, so and once again, it wasn't one of the questions you asked, but it's worth sharing. So context, actually, I actually bought this property. You'll laugh. You'll laugh. I bought this property off Facebook Marketplace, right? So someone listed their property on like Facebook Marketplace. It was such a hot market to buy in. It was very hard to buy. So there's like a property at the time, you would put a property for sale within 2 days, there's 20 offers. Like it was that kind of market where it was so hot. So you're kind of exploring out of the place. And people probably can't even think you can even do that. But I joined all the Facebook groups. There's people, owners that sell privately and do all that kind of stuff. And yeah, that's how I bought it. So, which is wild in itself, which I think, yeah, people would find wild in
It's
itself.
amazing. It's incredible. It's
Yeah.
incredible.
Yeah,
But
and the
I
advantage of,
personally like it. I think that's the spirit. That's what I think. My personal reaction is, man, that's good. Like that's what you got to do. You have to be willing to, like, can I just say a quick mindset thing? People get so pedantic and salty about, like, for example, hearing you buying out of Facebook Marketplace,
yeah,
the fact that it makes people scream, like, to me, makes if it makes you scream, I think that makes you also an idiot, is what I think. The reason I think that is because, bro, why are you in property? Not Cage, I'm talking about to the listener. Why are you in property? You're in property because you want to make millions of fucking dollars. Isn't that why? I'm pretty sure. So here's the thing, man. If you want to make millions of fucking millions of dollars, you kind of have to be willing to do the shit that the mainstream are not going to do, because the mainstream do not have millions of dollars. So if you're going to do it, you've got to be willing to go that extra mile. You've got to be able to actually put your feet on the ground and walk, or put your hands in the mud. And if you're not willing to do that, I don't think you deserve it, is what I think. So man, man, the fact that you bought that on Facebook Marketplace, I think that deserves an applause for your creativity and your to me it's like resourcefulness, and it's another word I'm looking for, but effectively it's just like this um just beautiful creativity to me, and resourcefulness, that you've just gone in there and done that. Like that, you deserve this money, man, is my mentality. So yeah,
no,
just a
thanks.
digression. Yeah.
No, no, thanks, man. I appreciate it. And no, definitely, yeah. Like it was very hard to buy. I was like scouring the market. I'm like, how long? Because this is the market that I really believed in, which I'll share why in a second. But yeah, I bought for my brother in there. Yeah, like probably almost 2 years, 18 months prior to when I bought, and a bunch of other people as well. And they'd already made a lot of money, as you can see by this graph, even by that point. But based on what I could see there, that this is not just a short-term growth kind of market. There's a real long-term kind of play here. Try and see if I can show you where it is on the map roughly without, might be giving away the address anyway. But it's down in this pocket over here.
Close to the
Uh,
beach. Is that kind of what you're
yeah,
trying to indicate? Near the shopping
yeah.
center,
So
near the
it's
beach?
2 streets. Yeah, 2 streets from the ocean. And obviously, once again, that in itself doesn't make it, why you buy it there. But it's a very tightly held pocket. A lot of own occupiers want to live in that little area there. Like own occupier driven pockets are likely to keep growing even after the investor boom, because a lot of investors will come into a market, might lift the prices, but once yields in a desirable place where a lot of own occupiers want to live, you might hit a stagnation point. But if you kind of marry the two together, then even after investors leave, then the own occupiers can still sustain it, and there's desirability, and they'll keep that market going thereafter. So, and pretty much the amount at that time, the amount of land left on the coastlines, if I kind of zoom out, like Perth CBD is up here. So it seems quite far away. Once again, I won't go too much into Perth, but Perth is one of the longest cities in the world. So all of this is still considered metro. And then on that coastline of Perth Metro, there's only a few blocks of land left on that coastline. So a lot of other fundamentals going for it, but the supply is just diminishing, and that's just, yeah, ultimately just going to stand the test of time.
And can I
And
just ask quickly on that? So
yeah,
the supply is diminishing, but I think for a lot of people, for example, listening to this in Sydney, a question for the uninitiated is, who the fuck wants to go to Perth? Like, is there demand, basically? And
yeah,
how
good
did you
question.
know?
Yeah, good question. Good question. So a lot of that is scouring through I'm going to share something. Scouting through a lot of data, which I'm actually going to share some of that data in a minute as well. But on that note of supply, I just want to just harp on that a little bit because even in today's market, I'm just going to give it away some free advice here. Right now, one of the best places to buy in the country is in Tasmania, right? So at the same time, we're telling people to buy in Perth back then. People are like, who the hell lives in Perth? Other side of the country, blah, blah, blah. It's been the fastest growing market over the last 5 years, right? Now we're having similar conversations about Tasmania, right? It's not even part of Australia, blah, blah, blah. Who the hell lives there? All that other kind of stuff. And I'll show you a couple of my Tasmania properties and what they've done over the last 6 months in a second. Um, but the growth is economics 101, right? It's just supply versus demand, right? A lot of people make decisions a lot of the time based on the demand part of what they see here going on. And I'll give you once again, some free advice. A lot of people rushing into Melbourne, or they were rushing into Melbourne recently, because Melbourne has actually got the highest amount of demand coming in. International migration is actually number one in the country now. So when you kind of see these numbers, and Melbourne's been flat for a long time, should we go buy in Melbourne? And when you kind of hear all that, yeah, sure, makes sense, right? Got the most amount of people coming there, hasn't grown much for the last 5 years. It's only a matter of time. One of the best cities in the world, or second biggest city in Australia. But my question to you, Dim, is going to try and test your knowledge here and see what you think. Why is it maybe not?
Why is it maybe not a good idea to go to
Yeah, why is
Melbourne?
it maybe not just like, going to be one of the fastest growing markets in the country, despite the fact it's got going to have the most amount of population going in. It's the second most premier city in Australia by definition. It's been flat for the last 5 years and hasn't really grown, so there's a lot of potential built up in that market. Like
Mm.
there are certain pockets that are going to do well, don't get me wrong, but why is it, why may it not be?
My dumb answer is because maybe people are already feeling priced out of there. I have one other potential guess.
Yeah.
Is it because there's not enough space there?
Yeah, so cool. So it's almost the opposite, right?
So
So
all
cool. So
wrong. Yeah.
no, that was opposite. So going back, yeah, so like going back to the economic principle of supply and demand. So this is good. This is good. So it's actually got too much space. So they actually are
It
really good
shows
at
you
bringing.
it shows you where the average people are at
No,
by my answers.
no, not at all. But it's just no. It's actually interesting because there's actually likely to be a lot of supply. So because even though they've got the most amount of people coming in, they're really good at bringing on new homes. So even though they may have 100 people coming in, they're going to build 100 homes. Not what I mean, like enough homes, 50 homes, which is enough homes for 100 people. So even though you get a lot of people, the demand is keeping up. And there's so much land. Like we always make a joke, you can build all the way from Melbourne to Adelaide if you wanted to, and they just keep building. Why Sydney has done so well is land is restricted. So there's Blue Mountains on one side, you got Central Coast on the other side, you got national parks all around. So land just can't just keep going. So, and as a result of that, it's hard to bring on new supply. And that's why even though population levels in Sydney and Melbourne are the same, Sydney's just gone through the roof. And Melbourne, it's probably about 60% of the value what you get in Sydney for the like for like. So
That's incredible. That's lovely to hear. That I didn't know that. And
yeah.
and then Tasmania?
So and that's yeah, cool. So Tasmania, so what's happening right now in Tassie, very similar to what happened in Perth 4 or 5 years ago. So based on all forecasts and everything that we're
Which
looking
is
at,
which is what, by the way, that
yeah,
was actually one of my other questions because one of the things you said earlier, which is you said based on the data points, like because what I wrote was like, how did you know to get into this property in Madora Bay? And
yeah,
and
cool.
then you mentioned data points, and yeah. Anyway,
Yeah. I'll talk to this data in a second. Hopefully it's not distracting that I've put it up already before I'm going to talk about it. But ultimately, like for the amount of people that are forecasted to move in, which you can check in a few different ways, but the more important number to look at is what is the forecast for new builds likely to be into the future? So what we could see in Perth at the time is they were going to fall significantly short of new builds. And we could feel that on the ground when we were trying to build new houses in that location. It was taking 18 months plus. So it was super expensive to build. There wasn't enough land to build, and it was expensive because there was not the labor there, right? So we could see that was going to be the case at least for 3 to 5 years. But then to even correct that thereafter, being that far behind takes ages. So, and in certain pockets, you're landlocked as well. So, what's happening right now in Tasmania is like it's about 30% more expensive to build there than everywhere else. It's So all the similar things. There's labor shortages there already. They've got heaps of infrastructure going in, which I can share in a minute. And those people that are already undersupplied in terms of labor are going to get sucked into these other infrastructure jobs. So we can see, even though the population growth isn't massive, like relative to the population growth, the supply levels are likely to be about, I think it's 48 to 58%, 48 to 50% in by 2032 or something like that. So there's going to be a 50% shortage in homes relative to people, right? So, and then once again, to correct that thereafter, this is going to take, who knows, right? I'll be lying if I told you I can predict that far into the future, right? But what the fundamentals show that it's very unlikely to be fixed, you know? So, and so it's a very, very similar story, what's going on in Tasmania, that was in Perth. So level of population going in, level of infrastructure going on, and the likely supply that's like going to happen over the next X amount of years.
And can you speak to the supply? So because I think everyone will probably agree. Okay, it sounds like there's a shortage of I'm so sorry. Can you speak to the demand? Because
Yeah.
I think everyone agreed there's probably a shortage of supply in terms of like people like laboring to
Mm.
actually build the stuff, and then
Yeah.
also the land and all that. So I think everyone's on the same page there. What about the demand?
The demand side is actually harder to get right than people think because a lot of the population data that comes out is like looking backwards. So it looks at like what happened last year. So last year there was X amount of people that went to Melbourne, Sydney, Tasmania, blah, blah, blah. So there's just a bit of you kind of look at a couple of the drivers that will then drive the population there. And one of the biggest one is jobs. So you're looking at what kind of projects are being approved in those locations. So, and how many jobs is that likely to bring to those locations, which is going to bring people there. Hospitals, and universities are also quite big. So, for example, in whatever in Launceston, I know they're spending X amount, $600 million upgrading the university, which means they can increase the current amount of students up to 10,000 plus, and things like that. So you're trying to look at all these data points to get the forward-leading indicators of what that population is likely to look like. And one of another really good metric to look at is the trend of vacancy rates in the suburb. So not the actual vacancy rate itself, but which way is it trending? Because ultimately, so if I just let me just bring up a random vacancy just to show what's it? I'll pick a random one, 7010. It's one in a place called Glenorchy in a place called Glenorchy in one of the suburbs in Hobart. Um, as you can see here, well, once again, this is probably not the best example, but I'll talk to it anyway. But at the moment here, vacancy rates are 0.3%, 0. Like it's just there's no vacancies, right? So, and this is how this works is how this is in rentals. So for every rental home, like what's the vacancy rate? So 2% is like what you would define as like a balanced market between landlords and tenants. And you probably may not get much rental movement because it's a balanced market. Anything less than 1% is like crisis. Like it's like fully in favor of the landlord. You can probably put, significant rent increases and tenants have nowhere to go, so they're going to pay it anyway. And at these levels, you're talking crisis. Like, and I can talk to it on the ground. Like when we put an open home up on the first open home, 15 people walking through, tenanted within a week. That's kind of what's happening on the ground. And this kind of stuff. So there's data, but there's also the on the ground feedback leading to it. That kind of stuff just tells you what's happening with the population as well. So data points, jobs, infrastructure, vacancy rates, and on the ground feedback, I guess, to name a few, would be how you do that. And
That's incredible.
yeah,
Wow.
so no, that's
Wow.
that's that's that. And it's like really, yeah, and really it's just that relative to supply is how growth happens. Um, so I'll
And can
pause
I
again. Yeah.
Yeah, can I ask okay, so let's say you're like okay, you're listening to this and you're like, man, okay, this sounds great. It makes sense. Like, they're having a sub like basically it's the landlord's market. They're having a shortage of supply. So you know that there's going to be a lot of demand for the supply that does become available in intrinsically. Furthermore, the leading indicators of supply sorry, of demand seem to be there in terms of population, more population coming. So you're gonna have that good delta of supply and demand that's going to create the growth. So let's say you hear all that, and that sounds great. What does the actual acquisition and holding journey look like? So, for example, with even your Madora Bay property, like and if I can zoom out, is it kind of like you're just going to have to kind of deal with the hurt of negative gearing for say 5 years, and then you bank say 300 grand, and then you're like, okay, cool, like I've got this now. The growth is going to slow down because the supply and demand have caught up to each other, which by the way doesn't sound right, because from everything I've just understood you say, the supply and demand are not going to catch up to each other for probably 10 plus years. So there's a good runway of growth there. But then is there basically what I'm saying is there a diminishing returns expected? Like, is the 300K the majority of the money that you expect to make on that property?
Fantastic question. Like actually a really, really good question. So to answer the first part of your question, about rental and how much holding costs. Yeah. So with everything, you kind of factor that in. For me, investing is about growth. Like, and cash flow is just how much you're willing to stomach to get that growth. And everyone will have a different limit based on your current situation, but an extra $100 a week or whatever is nice, or whatever that may be. But a property growing by 300, $1 million over 10 years or whatever that could be is life changing. Whereas the cash flow is just like, yeah, it's nice. It keeps the fuel going so you can keep investing. But it's just like, what's your minimum threshold that you're willing to allow to allow for that growth? Because there might be a market that may grow better than this market, but you can't stomach the cash flow. So you still go to the next best market with where you can stomach the cash flow, if that answers that part of the question. But what I'm keen to answer is the second part of the question, because that's like it was a really good question actually, and not a lot of people would think to ask that. Um, yeah, so a lot of it is because eventually, over the long run, everything does to a certain degree revert back to the mean. Over hard to say, 10 years, 20 years, there is a mean reversion. So one of the key, like even this like built up pressure from Perth, the reason it's running so hard, along with the supply shortage, is there was so much built up tension of no growth over 10, 15 years as well. So it was way below the mean of the average growth in the area. And it's almost playing catch up, among other factors. So to your point, there is a certain level of importance in timing the market, and a lot of people will tell you there isn't, right? It's time in the market and eventually will catch up and blah blah blah. And yeah, if you hold it for 10 years, 15 years, at some point in the cycle, probably will catch up. But by getting that timing right and front loading that timing, it lets you go again faster. Whether you use the equity to go again, whether you want to sell down, take profits, and whatever you want to do, but by front loading that at the right time, it allows you to go again faster, as opposed to, yeah, having on the back end in 10 years time. So
That's super cool. And then the idea is, so that's super cool. That's a little nuance that I think a lot of people didn't pick up, which is just like, okay, cool. Like, so you do want to analyze, because what one of my friends said this very beautifully. He goes, everyone just thinks of the Australian property market, but dude, there's like 100 markets within the Australian property market, like there's the Perth market, and then within Perth, there's different pockets within Perth, right? So, so Kedge, is the idea, so you're kind of front loading the growth, which is super cool. You're basically dealing with what you can stomach in terms of the cash flow, and also what can also allow you to still get loans, presumably. So you got to deal with that from a cash flow perspective. And then you come out in 3 to 5 years ideally with some good equity, and then the idea is you're going to um keep on purchasing more deals like this. It doesn't a point come when the cash flow um starts to the lack of cash flow starts to impact you? Or because I can tell you with mine, like just because of the sheer time, the rent just goes up, and so they're all positive. All my properties are positively geared just because of the time that I've spent with them. So is it yeah? What does the
yeah,
journey
no,
look like? from
Yeah,
this
and
property, say?
yeah, for sure. So this may lead into some. I'm mindful of time. We've gone 40 minutes almost, so I'll go into
Shit,
some last
I've lost track. I lost track.
yeah, no, which is completely fine. So short answer is yes. So for me, like you can almost break it down into there's a phase which you can call, I think, accumulation phase, where you're trying to just accumulate as much as you can with the money that you have, and but there'll be a point you reach capacity, whether that's the loan capacity or whether that is just physically what you just can't afford to hold anymore. Like it's bleeding too much cash. As you said, over time, typically your rents will go up and things like that. So that should get less over time. Obviously, we're in a higher interest rate environment at the moment, so those things can also play a factor too. But assuming interest rates stayed stable, then typically over time that will catch up. But then after you get to a certain phase, you can start pivoting asset types. So you are buying more things that you can generate income from, or you may have even bought assets already that you could turn into higher income producing assets. So, as an example, I'll go on to my next purchase in that journey, which would have been this one in Golden Square, which I'll just run into. I just different example. There was an article that I had written about me for this one. This was fully random. This is before I even ran this buyer's agency business. Um, it was actually a really interesting story, and someone actually reached out to the real estate agent. Real estate agent is like, "Oh, this guy had a pretty interesting story. You might want to speak to him." And they just kind of did an article. Once again, I
And
gave them a
for
lot of value in the
everyone,
article. They just kind
yeah,
of
for
made it.
everyone listening, if you're just listening to this, it's super cool. Cage is showing me an article, written in the Herald Sun about him. It has his photo in the article, and the headline of the article says, "How a 450K Bendigo fixer-upper made 200K for a savvy investor in 8 weeks." And then there's a photo of Kedge with the property, and then it says investor flips Bendigo home, gains 200K in 8 weeks. So what a G.
So yeah, I talked about once again that can be slightly misleading saying flips the home because I still hold the home, so I didn't sell it. But yes. So I'll quickly I just go to the I think I got a screenshot of the floor plan here. So what I did, this was like a older home. So I bought it for 400, just under 450 at the time. But very old home, right? And the bathrooms needed to be redone. And this is super different to the Madora Bay one, whereas like super neat, haven't spent a dollar on it, still in maintenance. So been renting out, just doing its thing, small block, good location, letting the location do the heavy lifting ultimately is what's happening with the Madora Bay one. This one, full opposite, right? House was pretty, I ended up spending about 60K. I think it ended up becoming like 70K on renovating, renovating this property. But I did that because, yeah, I saw what that asset could become. So and one of the biggest changes I did to this one here, for people that can see, this section here, laundry and this bathroom. I moved this bar as part of the bigger renovation that I did and had to upgrade the bathrooms. I moved that toilet that is separate into this bathroom here. So consolidate and then turn this whole laundry thing into a fourth bedroom. So I turned that into a fourth bedroom. There's a door coming through here. Door coming through here. Different entrance to the bathroom. And yes, to turn this into from a three-bedroom house into a four-bedroom house. So I kind of looked in the market and was like, oh, what a four-bedroom, two-bathroom home selling for in this market? I'm buying a three-bedroom home, old three-bedroom home. So if I spend what I spend on it, what will it be worth at the end? And so ultimately, yeah, bought it for around 450, spent around 70, and then by the end of it was like 700K plus kind of property in summary. And in addition to that, as you can see, this one is a much bigger land. And to your point of generating more cash flow in time, when I feel like the time is right, I can go put a granny flat on the back of this property too. Then just by doing that, spend about 200K to get another 400 to $450 a week in income. We'll turn this property into positive cash flow as well. So different strategy.
Incredible, incredible, man. I do have a few questions for you. We're going to say something else, Kedge?
No, actually, no. Ask the questions. Yeah.
Okay, the first one is specific, kind of more specific to this property. I've actually
Yeah.
written down four questions for you, but let's see how we go.
Yeah.
Like the first one is, where did you get the expertise to renovate? Like, I mean, I know that you have a buyer's agency and you guys help people with property.
Mm.
And for everyone listening, and I'm sure there'll definitely be people interested. So we will, towards the end, we'll make sure that Ked shares how you can connect with him if you would like that. Having said that, like, one thing that's always steered me away, Kedge, from renovations is I don't know shit about it, and do you guys help people with that? I genuinely don't know.
Yeah. If you want, I only had a few questions, but let's go through this one and we can come back to the rest. So short answer is honestly, it's just no real history, just time, energy, research that, went into it in terms of, yeah, like what would it cost to renovate a, like, so first and the main research is cool. This property exists here in the market. If I renovated it, made it newer, added a bedroom, what are other properties like that selling in the market? So is there potential there to do it? Is obviously the first point of research. Second is how do you do it? Then it's like really just calling tradesperson after tradesperson, builder after builder. See, because I know what I want to do. I need to make it. I need to turn this bathroom's old. I need a new bathroom, right? I want to open this up here and turn this into a bedroom. Like I wanted to open this wall up to make this living dining more open. Like, there's a few things that I did within the plan. I need to move the laundry. I'm turning this a bedroom. I need to move the laundry somewhere else. So I know what I wanted to do. Then it was just calling, getting quotes, getting rough estimations. And true answer, I probably end up spending 20K more than I budgeted for. So these are the things that, you always need to factor in because I thought it'll be this, but then you rip a wall out here and there's other shit there. So a 50K budget ended up becoming 70K. So there are risks involved, but really it's just knowing what I wanted. Then it's just making the calls, doing the research, and then taking a little bit of risk to go do it. Is probably what is the
Well,
simple answer.
that's a delightful answer. Sorry, you go on, man.
No, and that's it. And then now we've done it a few times for other clients, and we've got some like in certain locations, we've got good relationships with builders, people that we trust and whatnot as well. But at the time, yeah, it was just really hands-on, just figuring it out. Yeah. No,
That's
and I project managed it from Sydney in Bendigo. So I've never gone to this property, FYI. Just
yeah.
found someone that I trusted, managed it, and a thing there. I did have a really good friend who lives in Melbourne that was happy, once it was kind of all done, who drove up for me, checked it out. Obviously, you could have a local property manager or someone else do that. Or if you're doing a big job like this, you might, not going to cost you that much to go fly there and check it out if you wanted to. But you actually don't need to. So yeah.
Yeah, depending on where people are at in their investment journey, they may not realize that either. I've actually, of the six properties that I had, I've never seen one of them. I've never seen one of them in person. So I think I was okay with that mentality because my in the first foray into investing was with stocks, and it's not
Mm.
like you see what a stock looks like. So it was about, yeah, the data for me. Anyway, a few more questions for you, Kedge, unless you would like to say anything else on that.
No, keep going, man. I'm enjoying the questions. It's like helping my ideas flow.
Nice. So I want to ask a more advanced question for the more advanced people listening to this, and I do believe that's going to be most of them, ironically. Um, Bro, what about getting loans? Like what like so for example, let's say that the per like let's say that there's someone who's listening to this who makes 100 grand a year, someone's making 150, someone's making 250 plus, and then someone's a business owner. Can you talk us through in the current day, which is we're filming this on the 22nd of May 2026, can you talk us through what getting loans looks like in the current day, and continuing, and basically where this question is leading is an overarching concern that I reckon people have if they don't know is is there still wealth to be made in property? Because the way that all the stuff in the financial review is saying with the budget and all this stuff, it makes it sound like we're completely priced out. There's no more wealth to be made in property. Having said that, I remember 12 years ago when I bought my first property that everyone was telling me it was a bad idea anyway. So I don't know. I'd love to hear your thoughts on all this.
Okay. You know what? Let's use the loan part I'll touch on. Let me use this as the opportunity to talk through the budget very, very quickly. I only need 2 minutes, like a 2 minute high level overview of what's kind of happened there, because I guess it's all linked together. Um, so what the two biggest changes that came out was removing negative gearing for existing properties and indexation on capital gains on existing properties. The the current same benefits that existed before are still there for brand new properties. So just very quickly, so the real novice investor or the average investor may just go running out to go buy these house and land packages. And there'll be certain areas where it will make sense. But typically, a lot of these ones are done in the whoop whoop estates where there is an oversupply, there's a lot of land. So, what we talked about earlier is your growth may get stunted because of that. Not everywhere, like I don't want to make a blanket statement like that, but not everywhere, but in a lot of places it will. Like the outer suburbs of Melbourne, where a lot of this stuff is happening. Um, so, and remembering we're in this for the growth, is the most important thing because that's what's actually going to be life changing. So I'll just say that once again, we'll work in certain places. So the negative gearing part, I want to say first and foremost is, yeah, as much as it will hurt cash flow because you don't get it against your income every single year, the losses that you do get will get carried forward till such time your property makes a profit or when you sell that property. So you're not losing the negative gearing as a net number. It's just going to be deferred a lot later down the line. So it does hurt when holding the property year on year because the cash flow is not going to be easy to hold, but you're not losing it. And the indexation, when you actually do the calculation on the capital gains, and this is the technical, it's a bit technical. So
Yeah, and what does the indexation mean as well? Because some people don't
yeah,
know.
good.
Yeah.
Yeah. So what they're doing is so at the moment, if you hold a property for more than 12 months, you get 50% of the gain is tax free. So if you made 500K profit, 250K is zero tax. You just get it. And the other 250K is taxed on the same rate as your personal income. So the indexation method is they will calculate what the property has grown by if it just grew with inflation. So if inflation rate is 3% a year, as an example, so a 500K property, I did this, a real calculation that I did. So a 500K property over 10 years, if it was 3% inflation, would be worth about, I'm going to round up to 700, it's 680 something, but call it 700,000. Say it's now worth $1 million. You get taxed on the million minus the 700. So anything above the inflation rate. So you get taxed. So you're effectively still getting that 200K tax free, and now you're getting taxed on that 300. So it's not as dramatic as people sound. And if actually inflation is high, it can actually work in your favor. So it's like you're protected in a high inflation environment, which we are currently in. Who knows what's going to happen? But if it does, you're actually protected because your property may not, because the inflation rate's so high, that number might be smaller than 50%, the gains that we're currently getting back at the moment. I know that's a bit technical, so ask questions if you feel like there's any explanation required on that.
No, I think it's good. And what's your perspective? So, okay, because I think I know what the answer is now, even from
Yeah.
that first answer. Your perspective one is there's still wealth to be made with property. And then we were going to talk about loans as well.
Yeah, so I was going to say that. So I'll talk about the loan part very quickly because it ties into this. So the biggest part, and I think you were personally affected by this because you're going through this and you're going through your loan application. And the one bank, it was literally the one bank that got rid of it immediately, which was Macquarie. Because negative gearing changes are likely to be there. Some banks have taken that out of their borrowing power calculations. So, which means before you might have been able to borrow this much, but now they're taking negative gearing out, your borrowing power reduces because your cash flow has reduced. Not every bank has done this at this stage, so it just depends what the banks are going to do. But Macquarie was one of the banks that did it straight away, and you were in flight with an application at the time, and so that's why So now, like, we're pivoting with you and looking at what banks we can take you to so you can still get the maximum borrowing. So that depending on, because we still don't know yet, it's kind of in flight and all the banks are still scrambling and whatever. But if borrowing capacities go down because of that, that is probably going to be the biggest hurt because investors are going to be forced that what they can borrow is going to get reduced. So which may then dictate what kind of asset they can buy, or maybe they can only buy new properties because it's dropped to, because you still get that for things. So depending on what your borrowing capacities are, that may drive your decision making as well. So your question here is impact on property prices and things like that. The reality is, yeah, still money to be made. So even with this, for example, like the gains, even if like assuming inflation rate is going to be 3%, which is where it should be. Sorry, my camera just changed a little bit, but we're
Yeah,
still
yeah,
there.
that's okay. Yeah.
Yeah, so I might even just 1 second. I'm just going to stop sharing for a moment. Should I stop sharing?
Yeah.
Am I
Yeah,
sharing?
yeah. Yeah, no, I just switched off the sharing because
Ah, that's why. Okay,
otherwise
that
people
makes
won't see
makes
your
sense.
face. Yeah.
Makes sense. Makes sense. Let me close this. Um, So yeah, still gains to be made. In some overall, like if you when you look at the numbers of the Australian numbers, I feel like you're going to see in 12 months' time that growth has probably come down, or we might even see a negative overall. A lot of that's going to be driven by the upper end of the market. Because places like Sydney and stuff to buy an investment property is just almost not going to make sense for a lot of people because the holding costs, the yields are so low, so the holding costs are so high. So without negative gearing, you're just not going to be able to stomach it. So it's just going to drive people to different behaviors, and investors are going to be driven to different kinds of behaviors. And that goes back to your thing about markets within markets. So there's still going to be markets that are going to grow 20% a year, 30% a year, like like we saw in some of the properties that I showed you. But it's just gonna behavior is gonna change, and we just got to move with that behavior and yeah, buy in those locations as opposed to just buy with traditional thinking where someone who lived in Sydney may have just bought a property in Sydney 10 years ago and would have done well wherever they bought it, just because of whatever. I think it's going to be a lot more education and a lot more selective with where we do it.
That's very encouraging. That's
Yeah.
actually incredibly encouraging to think about
Yeah.
because it's just I feel like if you're not in the game and you're not like yeah, living and breathing his stuff, relatively often, then all you really have as a conduit to knowing about this stuff is what you read in the financial review or you see on the news. And then, but yeah, very difficult to trust that because, it seems like it's always like there's something wrong. Like it's quite rare that usually when you're seeing something in the media that something's positive, you almost feel like it's too late. If it's booming and it's in the news, then yeah, you're probably behind. So that's really wonderful. I do have one more question for you, man, unless you're going to say something else.
No, over to you.
Um, Man, my question is like, what is the question? What is the question that you wish you got asked more by people who are looking to grow wealth through property?
Oof, good question. What asked more?
Well, what's the question that you wish people would ask instead, because maybe people ask you all types of shit, but it's not actually what they need to be focusing on right now.
Yeah, I don't, as in, maybe it's not the question, but I think the suburb, I want to say the fact is the suburb will do 80% of the job for you. So,
Wow.
so like, even if I gave you the sub, you go through
I can't believe I just heard that's incredible.
So by getting that piece right, bro, you can go throw a dartboard, you get a good result. But the other 20%, getting the right asset, the house, everything within there, you make the other 20%, that also compounds over time.
Mm.
And I think just busting myths like it's another question, but obviously people have a lot of things. If it's closer to the city, it's going to grow better. If it's what else? If it's near the beach, it's going to grow better. If it's near a school, it's going to grow better. Like, as in, some of these things can be true in certain situations, but I think people may have had a personal experience where that's happened, and then they kind of just like, cool. Like, so for example, when I'm showing your property in Hobart as an example, I'm just gonna can I share my screen and show you an
Yeah, yeah,
example again? Because
absolutely,
I think,
please. Absolutely.
like, I'll show you one of my favorite places to buy. Here's a free tip: go buy in the suburb if you can. So, um,
So much value in today's podcast.
yeah.
Let's have a
So
look.
I want to show you a data point here. So let me go on the map here. It's a place called Old Beach in Perth. And actually, I don't know, I won't show you the property I bought for someone else recently. Old Beach, just go into it. So, all right, Hobart is here.
Got it.
Just gonna show open the map, just make it a bit clear. So Hobart is here. Old Beach is all the way up here, right? So you kind of got to go here, drive down here, pass through Moona, Glenorchy, Chigwell, Claremont, come over the bridge, all the way over here, right? Great Gage
How
Brook.
how how far is that from Hobart?
I think from memory, 25 minutes or so. Let's just put it in there.
All right, right.
Not 4 hours, 20. Yeah, there you go. 27 minutes, bit of traffic at the moment. So,
Yeah, yeah.
relative to thing. No, you can go this way too. But anyway, but yeah, but you get it. So, and then to add to that, Gagebrook is like the hood. 75% public housing, like just one of the scariest places to be. Having said
Nice.
that, we bought for a client there because their budget's 450K. So, there's a place for
Yeah,
everything, right? But
yeah.
yeah, the hood there, Old Beach is, yeah, Old Beach is all this area. This is all Old Beach. Yeah. So
Nice.
distance wise, you've got Oh my gosh, sorry, clicking around. So you've got places like Moona here, you've got Glenorchy in this, if I zoom in, which are all places that we are buying in, like as well.
Mm,
But you get a very similar price point for certain types of stock up in Old Beach. But I would say Old Beach is far superior than most of these places in here, right? Even though it's further away. So when you're showing a client a piece of, and I'm going to show you the data in a second of why. But when a client's looking at it and we're sharing it with a client, they might be like, "Oh, can you find me something here?" And because they don't know any better, and they're naturally going to gravitate towards, "Oh, it's closer to the city. It's not as far away. The house looks nicer." But and don't get me wrong, you're going to get good outcomes here. That's not what I'm saying, but I reckon you're going to get a better outcome in Old Beach. And I'm going to show you some data now. All right, these are for the nerds out there because this can get a bit dry. So, Old Beach, and let me compare that to Glenorchy, which is also a great place to buy, by the way. So, it's going to be a good one to compare to. Oh, that's Glenorchy City Council, but that's all right. We'll use the council numbers. It'll be, you know what? No, let's use the suburb by suburb because that'll be more of a direct comparison. Glenorchy, Tas. All right. Gonna get your questions ready, Dim. All right. So
and this tool that you're using is called H-tag.
yeah, it's a service provider. Like you pay a monthly fee for it. So about and like an everyday person can access it too. And
Cool.
there's a few other tools that we use, but I can't remember exactly how much it is, but maybe $300 a month or a couple $100 a month or something, along those lines. But as a one-off
Cool.
investor, you can use it and unsubscribe once you bought it on
Yeah.
the daily basis. So we subscribe
Cool.
to it permanently. So Old Beach, I'll show you something here. So there's a number here, and I'm mindful of time, so I might not go into the depth that I normally would go in. A really cool data point called IRSAD, and this is to do with socioeconomic advantage and disadvantage provided by the ABS, so government number, and it pulls in a lot of data points. It's actually a number from 1 to 1,000, but in this thing it's 1 to 10. But to do with affluence, demographics, how much income people make in that suburb, like pretty much, and ultimately, in a simple word, how desirable is that place to live? Because of the types of people that live there. And if you kind of look at that with data, there's a really strong correlation between IRSAD and the price ceiling a suburb can get to. So, for example, at the IRSAD of one, there's only 12 suburbs in Australia that have crossed $1 million, and they're all in New South Wales because it's all relative, right? So, like Mount Druitt would have been an IRSAD of one, cost $1 million, but the law of probability says that it's got to hit a ceiling at a certain price point. But that's kind of depends on where you are. So
And for people just listening to this, IRSAD, it shares here, stands for Index of Relative. Could you go back to it, Kate? Yeah,
sorry, I was
yeah, yeah,
multitasking while you were doing that, but
that's all
I'll
right.
come back.
Index of relative, what's it say? So index of relative socio-economic advantage and disadvantage. So IRSAD, IRSAD, index of relative socio-economic advantage and disadvantage. So that's amazing. So in this, it's 1 out of 10, one being the lowest. So the Druid got one, and so there's a kind of correlation, is a way you can put it, that probably the price ceiling for the properties is probably going to be around the $1 million mark.
Yeah, and it's relative for locations. I wouldn't, 1 million is the number we're using, but relative to the location. And ultimately, it's a game of probability, right? So if you've got two suburbs that you can buy in 700K for, and one of those suburbs got an IRSAD of one, and the other suburb's got an IRSAD of six, like, why would I go buy in that suburb with an IRSAD of one when I've got a suburb there? It doesn't mean this one with one's not going to grow, but we're just putting the laws of probability in our advantage, and making those decisions. And for a price point of, we can buy in Old Beach for 700 kind of price point, 750 maybe. If you're lucky, we bought something for 690 the other week. But for that price point, someone get Earthside of 6 is a super high price point. You can see Earthside of 6 cracking 1.5. It's got the capacity to get to 1.5, 1.6. So even after the initial growth period, there's a lot of steam that this could keep going. And another really good metric here, renter to owner, 88% of people in this suburb are owner occupiers, right? So only 12% are renters. So owner occupiers are more emotional. They're happy to pay extra for their properties. They upgrade their properties. They keep it nicer, which helps the suburb, right? Um, and there's another thing called affordability index, like relative to the average price in that suburb and the average income for the person in that suburb. What is that? And it's 35.9 here. And the point here is you cannot look at a page in isolation and say this is good or bad, because you need to then compare this to other suburbs at a similar price point, and it's all relative. Because you'll see in some suburbs where it's 2 million, years to own will say 70 years. That doesn't mean good or bad. You want to compare to other suburbs of 2 million to kind of see what that looks like. But the point of this exercise was this is a lot further than the city compared to, I put Muna here, which is also a great place to buy. Similar average price point, 700K. IRSAD of 3, higher renter to owner ratio, those kinds of things. Affordability, I think from memory is lower. It's 39.5, where Old Beach was, I think, what did I say? 34 point something, I think. Um, so laws of probability would tell you that, cool, Old Beach, if I could spend the same thing, I'd rather spend that in Old Beach than Muna, but Muna is closer to the CBD. So, so just busting some of those myths that people may have in their mind that what makes a location good.
I think that's incredibly fantastic. And actually, what came to my mind when you were explaining that was a lot of people these days would probably be thinking that and getting tricked into like doing something on AI to research different suburbs and different properties. Even if you use Google Deep Research, what I've got to learn on my in my own business journey equivalent is like the AI will give you a very confident answer. But the thing is, if you don't have the expertise to think about all these different variables and ask the right questions, you're almost limited in the quality of the output you're going to get from the AI because the AI won't know to consider these things often at times unless you specifically prompt it to do so. So I really do mean that. Like, I've seen people thinking they have a great output from AI in terms of like a marketing thing or whatever, but then only because of my astute knowledge of Facebook Meta ads library and Facebook advertising, I know to say actually that's bullshit. That's bullshit because of this, and this. And then you ask the AI, what about this, and then it goes, oh yeah, you're right. Like what about yeah, you're right. It's actually based on this. It's a bad idea. So I just think there's so much value in the mastery of doing this. Clearly, so much incredible money to be made. So, can I ask, Kedge, were there any other things that you really wanted to speak about today, or you wanted to make sure that got communicated today? Because this has been a masterclass on property.
Um, yeah, it's been good, and like I love it because we've just been kind of freestyling. Because I didn't even get to tour my own properties, but that's okay. We can save that. We can save that for another time. I think, this in terms of adding value, like these these anecdotes and these conversations are probably going to add more than showing you the property. But one thing I will say is purchased in like one in Launceston and one in Hobart, like one 6 months ago, one 3 months ago. The 6 months ago one has grown from 610 to 750 already, and the other one was a more expensive purchase in my estimate set for 970. And that one's actually already got like I bought really well. That's like a 1.2, in a very short time. That was not just market growth. That was like it was a property that had an issue, had a structural issue in the wall, so it had to get fixed. So a lot of people were turned away by it, but for me, I saw opportunity and bought that and whatnot as well. Once again, we can go deeper into that another time, but I just thought while we're here, I'll just share that too. Um, but I think really what else to share, the important things. I think one of the things you alluded to a few times was about loans. And as much as you can do the research and find the right property, like property is probably more of a game. They say it's a game of finance because you just need to find the right way to structure it. How can I maximize? How can I, so that I can borrow, like, because you asked the question before, which I didn't answer. If you're making 100K, 250K, or you're a business owner, like, um, yeah, so really, like, it is that's the part that's gone a lot harder, is the truth. Like before things were a bit more looser. Now you got to be creative and look at, so you might, that thing that you kind of accumulate as much as you can and then do granny flat in the future. You might do granny flat sooner to turn that property into positive, so that way you can go buy again sooner and things like that might be the case. Um, you can get creative with structures like trusts and company structures as well that you can purchase in. There's higher costs in maintaining them, but it may allow you to go sooner. So even though it costs you more to hold the property, than it would be if you just bought in your personal name. It may allow you to go do another purchase. So which the growth will outweigh that once again, coming up to what you can afford to do. The best people out there have the most flexibility, which is, you can call it unfair, but it's for playing the rules that we have, are you're probably your business owners. So if you already run a business and I guess you can move profits around from your company, if you're particularly in a company structure, if you own a business in and you're running obviously a successful business with profits and things like that, you can move money around and things. Once again, I won't give advice because I'm not allowed to, but you can get creative. So depending on what you've got, like working with a good broker, potentially a good accountant, um, is probably more important than ever before.
That that's incredible. I think it's been a incredible episode today. I hope one that please do that people do share with their friends and helps everyone come up in terms of property and the incredible value you can get. For me personally, I found it very motivating just personally because it's just like amazing. Okay, so there's a lot of money to be made. For me, Kedge knows like my biggest struggle has just been getting the loans because there's, especially as a business owner, there's things around that, but it makes me even more motivated to make even more cash flow, and just get those loans done. And man, it just seems like there's just a golden opportunity in front of us. And if not now, then when to capitalize on it? You got to do it. I made my first $1 million through property, and for me, a great mentor once said to me, hey man, you know what I did, Dim? He goes, Dim, I actually just found the thing that worked for me and I doubled down on it. And what I have, because I've done business, I've done stocks, I've done options, I've done Forex, I've done crypto, and I've done property. And the thing that's made me the most money out of all of it was property. So like this, I found this incredibly fucking motivating. So thank you, Kedge. And um, yeah, I just think it's been a really wonderful episode. And yeah, Kedge, I'm happy to do the wrap up, or you do the wrap up for today.
Yeah, no, you can do the right. The only thing I'd say, yeah, I'm sure from this, it's probably potentially raised more questions than it may be answered. Hope there's obviously value here, but yeah, there's a lot of nuance to all of this stuff. So would love, like, genuinely love to hear the questions, and yeah, we'll unpack it over time in future episodes as well. So yeah, please, yeah, just yeah, don't be shy. Just throw it in the comments, reach out to us, whatever. Yeah, so,
Incredible. Yeah,
yeah.
please. Yeah, everyone, if you have questions, please do chuck it in the comments. And Kedge, let's make sure that we put your contact details, or however people, like an easy way for people to find you, because I have no doubt someone's, at least one person has heard this and gone, man, I would love to get Kedge's help with this. I'm one of those people, so yeah, man, let's make sure your contact details are below the episode description on YouTube. And if people need help, they know where to find you. Sounds good.
Cool. No, awesome. No, no, yeah, obviously, yeah, more than happy. Yeah, more than happy with that.
Cool. All right, everyone. Well, I think it's been a really wonderful episode number 10, I believe, double digits now of Namaste Rich. Thank you for joining us. This is Dim. Kedge, any final words from you?
No, no final word. Just go out there, go get it. So but yeah, no, that's all for this week. Um, yeah, that's all for this week. Have another great week and just keep living a fulfilled, rich life in all aspects, as I say, wealth, family, health, spirituality, and whatever else you want to add to that list. So
Beautifully said. Well done, Kedge. Well done, everyone. And we will see you next week. Thank you.